Good day traders, welcome to this week's RMD Weekly Market Overview. Markets are continuing to show lots of volatility with quite a few of our targets either reached or in the process of being reached. Today we will discuss how these setups are playing out and how to be best positioned to benefit from any new consolidation breakouts. I'm going to let the disclaimer roll and I will see you back in the chart.
As always, we start by looking at the US dollar to South African rand. Last week, once again, saw a retest of this confluence area between the monthly pivot at 1668 and our 4-hour 100 and 4-hour 200 SMAs. Price quickly got rejected from this area, only to find some support on the yearly R2 Pivot at 1655. At this stage, if price cannot get back above the weekly pivot, it's possible that we will see a move lower towards this weekly S1 pivot at 1640. And should we lose that support level, it's possible that price will finally get back to this lower target at the monthly S1 pivot at 1610. Of course, that is dependent on also a loss of this lower diagonal resistance, or support. Of course, if we are able to get back above the weekly pivot, it's possible that we will see a retest of this upper diagonal. Also, again, this bigger confluence area that we saw tested last week with our 4-hour 100 and 200 SMAs all converging on the same level, and this also now having a new additional area of resistance with this diagonal area. And of course, should price manage to clear that level, it's possible that we will retest this weekly R1 this level at the weekly R1 pivot at 1685, which is also this upper diagonal. We are moving on to the Euro USD. Last week saw price sell off almost immediately after the market open, with price rejecting this area of resistance at 1.18269 and immediately retested the monthly pivot at 1.178. Very briefly, then went back up to the 200 SMA and then fell straight through, only to find some support on the 4-hour 100 SMA at the low of the week at 1.173. At this stage, we are trading below the new weekly pivot, that would be at 1.174. And of course, this would be an important area to keep an eye out for any price action going into this new week. Also taking into account that we have this new upper diagonal boundary that has been formed, and of course this would act as some kind of some kind of falling wedge. And if we just briefly draw a trend line from that area, we can see that we do have this falling wedge type formation, meaning if we can stay above this lower diagonal that we can see projected over here in orange, and break above this interim area of support, of resistance at 1.172, and of course, very importantly, getting above the weekly pivot at 1.174, then it would open up areas of the 1.178, which is the monthly pivot. Of course, also the area of the weekly R1 pivot at 1.179, and then perhaps in the medium term, even at targets such as 1.188, which is the weekly R2 pivot for this week, but also a bigger target area going forward with a projected diagonal going up. If, however, we do not manage to get above this area of resistance at 1.173, the targets would be anything between the lower diagonal boundary that we have over here and perhaps our weekly S1 pivot at 1.165. Then just having a brief look at the economic calendar for the week, we can see that later today we have one high and one medium impact event. That is the Federal Chair Powell speaking at 2, and at 2:45 we have the European Central Bank President speaking. And then on Tuesday there's some Australian data coming out. Wednesday we have CPI figures at 8 o'clock in the morning. On Thursday we have the Bank of England Governor speaking. At 2:30 we have unemployment claims, and then of course on Friday quite a lot of European data coming out. So just keep an eye out on those, as they would be affecting all of the Euro and GBP pairs. There's also some flash manufacturing PMIs coming out affecting the US dollar at 345. We are now moving on to the GBPUSD. Last week price was unable to hold above the monthly pivot with a strong rejection from this area, with price only finding some support on the 4-hour 100 SMA, with a brief retest of the monthly pivot after that, and then once again it got rejected. This is also a level of previous diagonal support and resistance going back quite a couple of weeks. So also just worth noting that that is quite a strong area of resistance. And then of course, currently we are below our weekly pivot, with price trading in between the 4-hour 100 and 200 SMAs, and that means this would of course be the important area to watch for some price action, as a break above this area and above, especially above the weekly pivot at 1.295, which will also likely coincide with the 4-hour 200 SMA, would open up targets back again at this area of resistance at 1.3, and then perhaps even some highs heading for that weekly R1 pivot at 1.304. Then, if of course price do manage to break above that, it could open up medium-term targets much higher towards this 1.317 level, although I do not necessarily expect that to happen this week. If price manages to break below this diagonal and of course be rejected from our 4-hour 100 SMA, it's possible that we will see this area of support at 1.286 tested, and then the next areas of support would be in this area where our weekly S1 pivot is at 1.282, and then of course a very strong area of support would be this 1.276 to 1.277 level. We are now looking at the Australian dollar USD. As expected, a move back towards the monthly pivot at 0.719 happened as soon as the market opened last week, with price then also losing this important 4-hour 100 SMA, only to find support at this 0.707 level, where it is currently consolidating. And of course, at this stage, a break higher would likely see us retest this weekly pivot at 0.712, perhaps also this 4-hour 100 SMA again. That would also be just above that at 0.713 to 0.714. Should price, of course, be rejected from that level, we will probably head back towards this area and even lower should price break below this area of support, and that would give us targets of 0.7, where our weekly S1 pivot is at, and also our monthly S1 pivot at 0.697, should it also lose that area of support. Although I do think it's unlikely at this stage that we will make a new low below that, but of course anything can happen. Just looking at the opposite bullish scenario, if we do manage to get back above our weekly pivot and of course this 4-hour 100 SMA, the target could perhaps be retest of our monthly pivot, which is also the weekly R1 at 0.719. Looking now at the US 100 on Nasdaq 100, last week saw a proper rally kicking off from this inverted head and shoulders neckline, heading to about 75% of our full inverted head and shoulders target, which sits at about 12,485. It did, however, find some additional resistance from this 12,270 level, and then of course at this stage we are still in the bullish channel trending upwards, with price remaining above the 4-hour 50 SMA, and of course this lower bullish channel boundary that we have in this dashed line in yellow. If we do see a break below this level, it's possible that we will retest this area between our 4-hour 200 SMA, also our monthly pivot at 11,500 and the weekly S1 pivot at 11,590. And if that were to break, we can see there are some additional areas of support, and that could perhaps all culminate in a retest of this area at about 11,060, which is perhaps where it will meet up with the 100 daily SMA, which I have projected here on the 4-hour for you guys. If, however, we do continue our bullish run and manage to get back above the weekly pivot at 11,130, the targets or at least the areas of resistance would be the weekly R1 pivot at 12,140, and then if we do get above these levels, we could perhaps reach our full target, which sits at that weekly R2 pivot at 12,485. We are moving on to Brent crude oil. As expected, last week we saw a retest of the monthly pivot at 42.55 almost immediately after the market opened, We then saw price proceeding to consolidate and whipsaw around our monthly pivot, creating and also respecting these diagonal boundaries which it has now created. And that then leaves us, of course, with three scenarios for this week. The first being just a continuation of consolidation between these boundaries. And you can see we have them drawn quite clearly here. So we could perhaps just see price bounce between this $42 level as well as this $43.50 level. And perhaps, just staying around the monthly pivot. The alternative scenario is, of course, where we do see a bullish break above the upper diagonal, and that could propel us all the way to our inverted head and shoulder target, which sits around this 46.27 area, although it would also be a fair target expectation at around 45.60 to 45.85, which is just above our monthly R1 pivot level. There's also quite a few areas of resistance in between at 44.75 and also at 45.30. If, however, in the bearish scenario, we do break below our moving averages on the forward, so we can see we have our 4-hour 100 and 200 SMAs converging, also converging on this important yearly ST pivot at 42, which is also, of course, this important lower diagonal boundary. And should that break, we will see support levels at 41 tested. If that breaks, we of course then also have our major horizontal support at 39.90. And if that were to break, there is also this extreme lower target at the monthly S1 pivot. And now moving on to our precious metal gold. Gold last week getting rejected from the upper diagonal boundary and finding some support then on our 4-hour 100 SMA. It then proceeded to consolidate just below the monthly pivot at 1,905, where it has closed just shy of it on Friday. But the good thing is we now also have clear boundaries, diagonal boundaries going into this week. And of course, the area that I've highlighted here in purple would be the area to consider for some consolidation as we move into the week. And of course, also to keep an eye out for a break either above or below these diagonal boundaries. If we manage to break below the 4-hour 100 SMA and get rejected off of this level, it's possible that we'll see a retest of this area in between our weekly S1 pivot at 1,875 and this projected 100 daily SMA that I've projected on the 4-hour from the daily time frame. So this would be an area of support, and should price perhaps break below that, there would also be some additional support at 1,855. At this stage, price is still trending upwards in a larger bullish channel. So in a scenario we do manage to break above our upper diagonal boundary, there would be some initial resistance at the weekly R1 pivot at 1,926, and should of course price manage to get above that, it will open up our much higher targets in between 1,950 and even as high as 1,968. We are finally concluding this week's video by looking at Bitcoin USD. Last week saw a brief rally to resistance, and price very briefly then got rejected at last week's weekly R1 pivot at 11,700. That coincidentally is also this week's weekly R1 pivot. But nevertheless, at this stage, we are seeing price still in a consolidation with, depending on how we project this rally, we can see that we have retested a 50% Fibonacci retracement, meaning we do still have the opportunity to see a move much higher to make new highs going into this week. But just considering some scenarios, if we do manage to break below our lower diagonal boundary, and that would mean, of course, that we reject our weekly pivot moving into this week at 11,445, that would give us new support areas of 11,155, which is the weekly S1 pivot, and also this very important level of support now sitting at 10,880, which is also the monthly pivot and weekly S2 pivots, and also we will see price meet up with the 4-hour 200 SMA. So those would be in a bearish scenario, we do come back into this area. Just briefly looking at the daily time frame to consider any further bullish targets. We can see with a break above that upper diagonal, we have initial targets at our weekly R1 as mentioned, which is the lie from last week at 11,700. And then above that, we have our monthly R1 pivot at 11,945, which would be a very fair bullish target with a little bit of a stretch target slightly above that at resistance after a rush head and shoulders shoulder from the beginning of September, and that would be sitting at 12,057.
I hope you enjoyed this week's video. Please remember to subscribe and don't forget to visit our website www.rmdtrader.com to see what RMD Trader can offer you. Until next time, this is John Jacobs for RMD Trader. Trade smart and trade successful.